It's Thursday, September 21st, 2023. A lot to talk about today. Please make sure to like, share, and subscribe. But without further ado, let's get right into it today. Markets really got rattled today. Dow Jones down 370, NASDAQ was down 245. My question to all of you is, what happened today? Are the markets beginning to realize that the Fed, that Jerome Powell, is not going to reverse course? I think that the markets have really been ignoring the message. And I think that today, yesterday they seemed very, very confused. Today the markets, I think, began to realize for the first time that maybe Jerome Powell is not going to reverse course. He said yesterday they're going to hold higher for longer. He also said yesterday that he doesn't expect a soft landing. Are the markets beginning to realize that there is going to be no soft landing? In fact, there is going to be a crash landing, and you need to all be preparing for this right now. Now, a few things today. I jotted down some notes, nothing in order here. But again, comment down below what happened with the markets today. Are they beginning to realize that the Fed is not going to be reversing course? And, you know, I've said this for a very, very long time. These markets have relied solely on the Fed to keep rates at zero, to keep pumping trillions of dollars into these markets. And now that the Fed isn't doing that, these markets have been somewhat struggling. And they've been basically limping along with no fundamentals other than the hope that the Fed is going to reverse course, print a lot of money, and push interest rates back down. I don't see it happening. Another thing yesterday that Jerome Powell said is for 2024, we were going to have 4 rate cuts. Now it's down to 2. Well, at some point, they're going to come out and say, hey, maybe we're just going to get 1 rate cut in 2024. And then they could change their mind and say, hey, 0 rate cuts for 2024. We're just going to hold them higher for longer, or hold them higher for longer, and maybe we have 1 or 2 rate hikes in 2024. Anything is possible right now, but I don't see how the Fed can reverse course and start cutting rates when they're nowhere near their number of 2%. Another concern I have is this bond yield. 10-year bond yield, as I make this video, is sitting at 4.96%. This is the highest it's been since 2007. This is a big problem. The bond market is huge, and the bond market is warning us of something, ladies and gentlemen. So let's keep an eye on that. But 4.96. And if you don't know this, they base your mortgage rates off of the 10-year, the interest on your credit cards, the interest on a car loan. It's all based pretty much off the 10-year bond yield. So if the 10-year bond yield is going up, mortgage rates are going up, the cost to borrow money to buy a car is going up, the interest on your credit card, it's going up. So pay attention to this. Another thing I was looking at today, jobless claims. They dropped 20,000 week over week. We got 201,000 jobless claims last week. So that's telling us that the labor market is still somewhat tight, and the Fed's looking at this. And the Fed is going, in my opinion, going to be forced to raise rates in November, at least 25 basis points. But what if we have higher than anticipated inflation in September and October? What are they going to do in November? Would they raise 50 basis points? So this is going to be very, very interesting to see how this all plays out. But one thing is for sure, and this is my humble opinion only, not financial advice, but I think this is what I'm doing. I'm in real things, ladies and gentlemen. I'm in real things. I think that reality right now is placing risk in people's pensions, their stock holdings, dollars that they're holding in banks, dollars that they're holding on a computer, a file that's sitting in the cloud. If you don't hold it, you don't own it. If you can't access it in a minute, you're vulnerable. You're really taking a risk, ladies and gentlemen. So be very, very careful where your money is at and what your money is in. Is it entirely in stocks, in bonds, and cryptocurrencies? I would be very, very cautious I think your money should be in cash right now. I think it should be in gold. Maybe it should be in some silver. It should be in some land that produces food. Maybe it's in a property that's producing some income. But right now, I think that you better be very, very careful if you're holding all of your money in stocks and bonds, or letting a bank hold all of your cash on a computer screen sitting somewhere in the cloud, because when you need this stuff, you're not going to be able to get it. So be very, very careful. Again, not financial advice. This is how I'm looking at it. This is me thinking off the top of my head. This is how I'm strategizing right now. Could be completely wrong. I could be completely wrong. But this is my opinion, and solely my opinion. And I just hope that people are just thinking and not putting all their eggs in one basket. We saw yesterday this article on CNBC where refis went up 13.7%. And I gave my opinion of this yesterday, that why are people beginning to do refis? Why are they pulling money out of their homes? My personal opinion was because they're having financial emergencies and they need the funds right now. There's no other reason you would be paying 9 or 10% to pull money out of your home other than a financial emergency. I spoke to my good friend Marshall today. He made a very, very good point. He thinks that there's another point here to be made, that some of these homeowners right now know that they're going to land up losing these homes. And so what they're doing is they're purposely pulling money out of these homes, knowing that there's a big possibility down the road that they could lose these homes. So they're going to pull capital, pull funds out of these homes right now and put it away in case of emergency, in case they have to do a short sale or they default and give the keys back to the bank, that they have some money sitting on the sidelines in order to survive or to get back into the market. So that's a really, really good point. There are people strategizing right now going, hey, you know, they could be knowing that they may be losing a job, maybe a spouse lost a job, and they're going to pull cash out of that house right now, knowing that they may not have that house in 24 months, and yet they want to be able to walk away with something. So I don't know if that's right or wrong, if that's moral or not, but that's what people are doing. We saw this happen back in 2007, 2008. It was over. Many people had already pulled money out of these homes purposely because they knew that they were gonna default on these properties. And many people lived in these homes for 2 years, 3 years, and 4 years without paying a dime. So comment down below, what do you think about that? I think there's no doubt that people are pulling money out of these homes because they have a financial emergency, and there is really a possibility that many people are pulling money out now because they know that they're on borrowed time. The hedge today, U.S. existing home sales suffer second weakest summer ever. I will say this, if I can say anything, buyer beware. Let me repeat, buyer beware. If you are looking to buy a house right now, buyer beware. I think that there are a lot of people right now who bought a house in the last 24 months who really, really regret what they did. And if you're thinking about buying a house, if you're thinking about buying a house right now, you better really give this some serious thought and know that you are overpaying. This is the biggest bubble in housing history. Know that you are paying more than that house is actually worth, and know that you are buying in one of the biggest bubbles, the biggest bubble in U.S. housing history. Existing home sales dropped 0.7% month over month, leaving sales down 15.3% year over year. This is the second worst summer, only second to 2010. 2010 was worse than this one, but this isn't, I mean, who knows what kind of winter we're going to have and how bad winter sales will be. Now, they're going to continue to tell us that inventory is low and that's why all this is happening. But you must remember, what is really low is qualified buyers. When people cannot qualify to buy a home, you're going to see more trouble. And they don't want to talk about this. Nobody's talking about the amount of qualified buyers. This pool is continuing to shrink as people lose jobs, as inflation continues to crush them. The U.S. savings rate, 3.5%. People just can't even save money to buy a house. I think right now, and this is my opinion only, you have to be a sucker to buy a house. Now, maybe you were forced to sell a property and you're forced to move somewhere for a job, and that's a whole different situation. But I think for the most part, if you do not have to buy a house right now, I wouldn't do it. You have got to be a sucker. Inventory is going to rise, and there is a very important variable in this whole, I guess, formula, and that is when you have less qualified buyers, you have more inventory coming on the market, and you have mortgage rates now approaching 8%. The one variable is prices will and must come down. They're going to be. This is really going to be a war of attrition between the buyers and the sellers, and I will tell you right now, the seller is going to lose. The buyer is going to win here. Because at some point, people are forced to sell. Could be a divorce, could be a death in the family, could be a job loss, could be a multitude of reasons. Somebody's taking a job in another area, somebody's downsizing, somebody's going to a retirement home and needs to sell a house. There's a million different reasons, but people always have to sell. And you're going to have a limited amount of buyers who can purchase these homes while mortgage rates are going up. You're going to see prices come down. And you can just see what's happened in new cars. The new car lots, they're piling up with cars. Now, it's more expensive to buy a car. Prices have gone up. Interest rates to buy those cars have gone up. And you have a limited pool of people that can afford to buy these cars now. And so as that happens, we have begun to see prices come down. Now we have a strike. This could change everything, of course. But what we are seeing is we are seeing a lot more used cars hitting the market, and those used car prices are coming down because there are less people that can afford and less people who can qualify to buy these automobiles. And so prices are coming down, and they're going to continue to come down. And you're going to see the same thing happening in the housing market. You know, these agents tell you all the time that you might as well buy now because rates are going to go up, and you can always refi down the road. But the question is, how do you know that the rates are going to come down for you to refi? And if they do come down and you overpaid for this house and you're upside down in this house, how are you going to refi the house? So again, don't worry, just, and then in the next 6 months, rates are going to go up, so you might as well buy right now. They could go up for a year, but in 2 or 3 years, they're going to come down and you can refi. There's no guarantee that that's going to happen. And secondly, if it does happen and you're upside, if prices come down, as I think they're going to, and rates come down, you're upside down in your house. You paid more than you should have, more than it's worth. You're upside down. How are you going to refi your property when you're upside down? So be very, very careful of these people you're listening to. Many of these real estate agents are going to do anything they can because they're in desperation mode. So many people in the mortgage industry and the real estate industry are so desperate. They're getting absolutely destroyed now in the housing market. So they're going to tell a lot of people anything in order to get a sale right now. So be very, very cautious. I think you're much better off paying less for the house and paying more on the mortgage rate and paying a smaller price for the house versus paying more for the house and getting a lower rate. But what's happening now is people are paying more for a house and paying a higher rate. So we need to see, maybe rates go up and prices come way down. And I think that that's a great opportunity to buy. Yes, it'd be great if prices came down and rates came down at the same time. Great opportunity to buy, but that's not what we're going to see happen. We're going to see rates probably go higher, and we're going to begin to see prices come way, way down. So let's not forget, there is inventory out there and inventory that is coming. Existing home sales fall for 5th month as supply crunch worsens. This was on Fox Business. This is why the housing market is collapsing, because there's just no homes. There's no housing. I can tell you right now, just getting back from Texas a couple weeks ago, the amount of housing that is under construction is mind-blowing, absolutely mind-blowing. I see homes out here in the desert popping up all over the place. It's mind-blowing. There is so much inventory coming, but let's not forget, we have about 1.7 million homes under construction. Those are new homes. And then you have 1.3 million vacation homes on the market, or many of these are Airbnb properties or vacation homes. Then you have over 10 million second homes on the market. And typically, as the economy continues to worsen, people, the first thing they do is get rid of the vacation home. They're getting rid of the Lake Havasu house, the Vegas house. They're getting rid of the house that they're really not using. So we're going to see inventory coming from second homes, from the short-term rental market, the vacation market, and new homes. And of course, we're going to see more foreclosures and defaults, and that's going to be coming out too. So there will be no shortage of homes coming. So be aware of that, ladies and gentlemen. The homes are coming. The inventory is out there. It's just not on the market yet. I would call this maybe shadow inventory. It's coming. It's just not here yet, but it's on its way. So I think if you buy now, you are going to pay way too much for a property. And hey, if you're okay with that, it doesn't bother you, and this is your dream house and money's no option, God bless you. Have a great day. But I think no matter what, if you bought a house for, let's say, $700,000, and 2 years from now, that same house is $400 or $450, I think that would bother most people. Not all, but I think it would bother some people. We don't know how low prices are going to go. I think it really depends your location too and your market. But some of the hottest housing markets are going to get hit the hardest. And I do believe that we're going to, just like 2008, we're going to see certain areas of this country where prices are going to go down 50% or more. And I think that in some of the other markets that don't get hit as hard, you could easily see a 20, 30% hit. Everybody's going to see it, to one degree or another. New York Times, 8 million people have slipped into poverty since May as federal aid has dried up. Now this article is 2 years old, and I came across it today. 2 years, and this is from the New York Post. 8 million people 2 years ago have slipped into poverty. So we are continuing to watch the middle class shrink. And again, this just reinforces what I'm talking about today, what many of you have been talking about. When you have this many people falling from the middle class or lower middle class into poverty, and we're just watching the middle class disintegrate, where are the home buyers going to come from? Who's going to buy up all these homes? It's going to, ladies and gentlemen, we need things to collapse. We need things to collapse. We need the housing market especially to collapse so that we get prices back to reality. Reality, ladies and gentlemen. This is the only way the middle class has the ability and opportunity to buy a home. This is the only way somebody who may be poor actually has the chance to rent a home or an apartment. We have got to have this collapse to just flush everything out, to shake all the dead branches off the tree. Things must crash, and we must get back to reality, because the prices right now, the valuations of these properties, of stocks, of bonds, of so many of these assets are so overvalued that nobody right now even knows what they're really, really worth. That's why we need a good, healthy crash. It's going to hurt. It's going to be painful, but at least we know the valuations of these assets, of what a stock is really worth, what a company is really worth, what a house is really worth, what a car is really worth, what an ounce of gold is really, really worth. We need things to crash in order for the survival of the middle class and of the poor. Allnewspipeline.com. Something really bad is going to happen. Yes, there's no doubt. It's begun. If you haven't already noticed, when you're out and about, when you're talking to friends, family members, neighbors, you're just out walking around and you see people, they seem to literally be angry. Something, no doubt, in society feels off. Anxiety is off the charts. I've said this many, many times. You're going to see the divorce rate absolutely explode. Drug use, alcohol abuse, all this is going to explode. And this is why I think it's extremely important to be walking close to God. If you have a good church, you're very blessed, because there's not many of them out there. But at the end of the day, you don't need a church as long as you have a very good relationship with God and you're walking close to God. These are going to be very, very troubling times. Many people are going to be tested in many different ways, and you are entering a time of spiritual warfare without a doubt. There's no question about it. And so, you know, if I can advise one thing today, because people always think that I have all the solutions, which I certainly don't, but they think that, you know, I have all the answers. But I make these videos so we can start thinking about the solutions. One solution today, and I think it's one of the most important, is get right with God, say your prayers, be walking close to God, ask for protection, ask for strength, ask for guidance. That's one of the best things you could do today. It's absolutely no cost. It just takes a couple minutes of your time. People are on edge. People are worried. Again, the anxiety, the alcoholism, the drug abuse, the domestic abuse, the divorce, all of it is going to rise. You know, people are going to get fed up. They're going to get angry. They're going to get broke. They're going to get anxious, desperate, and most people are not prepared for what is coming. And so as all this is taking place, you have got to really strengthen your foundation spiritually, mentally, physically, and financially right now. This is going to get bad. People are going to get desperate. They're going to be pushed to their breaking points. People are going to go hungry. People are going to lose their homes. They're going to lose their jobs. They're going to lose their pensions. They're going to lose their retirements. And there is no real solution here other than you better get ready. And one way is you better be walking close to God. You better be asking God for protection. You better be asking for guidance. Get some skills right now, ladies and gentlemen. Know how to do things. Get your debts paid off as soon as you can. And just continue to stay on track with the food, the water, the assets, the barterable items, and all that stuff. This is going to be unlike any time in U.S. history, and we are probably the softest we have ever been. This is probably the softest generation America has ever produced, and we are going to go into one of the hardest, most brutal times in U.S. history, in my humble opinion. I'm going to leave it there today. Think about that. I just want everybody to start thinking outside of the box. Start thinking for yourself. Another solution is get out of the system the best that you can. The more attached you are to the system, the more vulnerable you are to go down with the system. The system's breaking right now. You do not want to be attached to it. So hopefully those are a couple solutions right there. Comment down below. Add your solutions, what you think we should be doing right now. What you think we should be adding to our preparations, what kind of skills should we be working on right now, what kind of assets are you putting away, what type of strategy do you have right now, what have you been doing? Comment down below. God bless every one of you. Thank you so much. Please like, share, and subscribe. God bless. Have a great day. Stay safe out there, and as always, I look forward to speaking with each and every one of you.